Hello, this is Jim Martens. I'm one of the editors of Elliott Wave International's Pro Services FX service. One of the markets we tracked last year was dollar yen, and over this more than 9-month period, from when it traded 111.70 down to 102.59, you can see that the decline was quite overlapping. From an Elliott Wave perspective, it was clear that the decline was corrective, but you can see how long it lasted and how far this correction traveled. So knowing it was a correction was simply not enough. Having an idea of where it should end was important also. And that's where having a sense of perspective is important. And I think this is one of the often overlooked strengths of the wave principle. Yes, it was valuable to know that decline should ultimately prove corrective. But where would it end? When would there be an opportunity available? And since the wave principle follows market patterns and it follows those same patterns on multiple degrees of trend, we look at the higher degree pattern and the lower degree patterns. But in this case, the higher degree pattern was critical to knowing when this decline should be nearing an end. So here's a 2-week chart. And you can see that dollar yen has staged a considerable advance that peaked in the mid-120s several years ago. Since then, it's been consolidating. Notice the converging trend lines. Notice, most importantly, waves A and C, with C being just a bit above wave A. Notice this prior slide was also corrective, even though it lasted several years. So that was the sign to us that a triangle is probably unfolding. If it's a bullish triangle, we're labeling it A through E, with A in place, B in place, C in place at 101.25. And this was the important observation. If a triangle is underway, then wave D should trade at higher levels in 3 waves. And then finally, wave E should unfold to the downside again in 3 waves, but it should end above 101.25, the end of wave C. All of wave D should unfold above 101.25. So returning to the daily chart, we knew this was a corrective slide. We counted it as a triple zigzag, and knowing that the turn higher should occur from 101.20 above 101.25 and would likely occur without a serious test of 101.25, we felt strongly, or were confident in saying, that the turn should occur from above 101.25, and when the market moved beneath 103 into the mid-102s, that it was time for a reversal. We're finally seeing evidence that that reversal has occurred, and we're looking to confirm the turn. That's what we're talking about in the Forex Pro service these days. Dollar yen presents probably one of the most interesting opportunities available to us, one of our most confident outlooks, and it's an outlook you might be interested in following over the weeks and months to come.